We are so screwed. I'm sorry. I'm just really frustrated right now. I don't want to skip the pleasantries. I just want to point out to you guys that we're screwed. Now, Bitcoin's price may reflect a higher price in the next coming days and weeks, but the Fed right now is stuck between a rock and a hard place. And they put themselves there. We've been able to see it. Those of us, with our drinking buddies, I don't have any drinking buddies, but I can imagine what it's like to have drinking buddies talking about these awful decisions that the Fed is making. And now what are they going to do? It's just terrible. They have three options in front of them. I want to lay out the consequences of those three options. And I want to start out by talking about the most likely option, the one that I think is the worst of the three, and the one that they are going to do today because they always do the thing that will end up giving us the worst results. And that is the fact that they're going to raise rates by 25 basis points. I would be absolutely floored. I would be shocked if they paused. They are not going to lower rates. That's the third option. I want to talk about the consequences of that because retail is going to get wrecked if they lower rates, but that's not going to happen this time around. But all right, they are going to raise rates 25 basis points. If you have been living under a rock, the Fed has been aggressively raising rates over the last, 15 months or so, maybe a little bit longer than that. And they've been doing so 50 basis points every meeting, 75 basis points, 75, and then they've recently slowed down to 50 and then 25. And at the last Fed meeting, it was 25. This Fed meeting, they're raising another 0.25%. I'm quite convinced of that. Now, what this has done is that it has caused banks to have on their books massive unrealized losses. And let me show you that chart right here. I think I showed this chart on Monday, but here we go again. Unrealized losses on investment securities. They're buying these treasuries at very low rates, low rates of returns, and they are losing big time because inflation is much higher than that. The federal funds rate is much higher than the treasuries that they've been buying. And so they have all these losses on their balance sheets, and it's off the charts. I mean, look at this. This is unprecedented. I mean, if it wasn't for these last four quarters, we would have thought that 2020, and 2021 were insane, but this is just unbelievable. It's just on a whole nother level. I mean, even look at 2008 in comparison to today. And so how's the Fed responding to this? They're going to raise rates. What is that going to do to banks' unrealized losses? It's going to make it even worse. And so here's the deal. They will rescue the banks. They have to rescue the banks. If they don't rescue the banks, then it's Armageddon. I talked about this on Monday. It is Armageddon. Employers will not be able to pay employees. Unemployment's going to skyrocket. People are not going to have money. They're going to raid grocery stores, which will not have employees because those employees aren't getting paid. And who's going to intervene? Are the cops going to get paid? So will they even be able to intervene? There will be people will starve. It's going to be absolute chaos. And the Fed knows that. And there's no way they're going to be able to let the banks fail. And look at what they have done over the last week in response to these banks, the smaller banks, starting with Silicon Valley Bank, which was very much a canary in a coal mine. Starting with them, look what they've done just in the last week. Here is their process of quantitative tightening, unwinding the assets on their balance sheet. They lowered from 8.95 trillion to 8.35 trillion over a span of a year, which really isn't that much, but quantitative tightening. And we've suffered, looking at the markets and stuff as a result of that, from only $60 billion. And in just 1 week, they've reversed 50% of 2022's quantitative tightening. That's 1 week in a high rate environment, a rate where we're supposed to be tight, an environment where we're supposed to be tightening. So let me ask you something, dear listener, the 50 of you who are watching this or who will have watched this. What happens if they raise rates and they're going to save the banks? This right here, 1 more week or 2 more weeks, we'll be right back to where we were. The amount of liquidity that they're injecting in the system, it's just going to go much higher. And we're gonna set in new highs on the Fed's balance sheet. It's just, I don't even think if they paused right now, I think that they would still have to reach new highs. They just undid 1 year of tightening. And look what it's yielded us. We're at 6% inflation, and we're almost right back to where we were a year ago. And look at how miserable this last year has been. And so that is option one, raise rates 25%. The Fed's balance sheet's going to explode regardless, but they're going to make it even worse. This is insane. I can't see any justifiable reason unless you want just a reset, a great reset, whatever. I don't see a justifiable reason to raise rates. The reason why they're going to raise rates is because right now, the so-called battle for inflation is still a more significant priority, and they think they can hide this crap. They think they can hide this from the general public, and they can, because barely anyone knows. I mean, the common person, barely anyone knows about this. And so what they want to do, the message thing they want to say and send is, we're going to do whatever it takes to fight inflation. And in the back door, they're going to be sneaking in billions of dollars of liquidity. It's just, it's insane. The thing that they should do is pause. I mean, really, I think they should lower rates and just usher in the Great Depression that's coming. But if they pause, here is the doomsday scenario. Oh no, we lost the battle against inflation, which is all show, because inflation is still going down. It's going to go down. It may not go down to 2%, but they communicate this nonsense about we're going to have a soft landing. We were never going to have a soft landing with raising rates this much. But all right, if we pause, here's what happens. The optics of that is that the U.S. dollar is no longer reliable. And so what happens to DXY? The DXY plummets. What happens to inflation? Inflation short term will continue to go down, but people will lose faith in the dollar, and inflation will then in turn go up much more. Now, all right, so should I say we should pause? I mean, really, I think we should lower rates. But both of these options, I want to be clear, this is bullish for Bitcoin. And I'm not even happy about it. I'm very not happy about that. All right, because short term, whatever, that's bullish for Bitcoin. But oh my goodness, I don't know what we do to get out of this. I mean, I knew we were going to get to this position where I would be saying, I don't know what we're going to do to get out of this. But people, they lose faith in the dollar. I think the first thing they're going to go fleet to is gold. I don't think they're going to fleet to another world currency. And I think, one thing they'll fleet to is Bitcoin. And so this could be very bullish for Bitcoin, but at the same time, it's like, be careful what you wish for. If you're wanting your Bitcoin to go up in value in comparison to the dollar, be careful what you wish for. The third option, I think, really is the most ideal, which is that they start lowering rates. And it's just, this is all terrible. I don't even know if I should say that, but here's what lowering rates does. It signals to the world that we are about to enter a recession, a massive recession. Don't lower rates to zero, just lower rates a little bit. And what that does is it communicates to the world, we're waving the white flag, it's over, and let's just bring on the Great Depression. We've got to suffer through it, and we'll suffer through it, and then on the other side of that, we'll be in a healthier position. But that's the one that's bearish for Bitcoin. I think for a week there'd be euphoria, and retail would be like, oh, I'm all in. They started raising rates, they pivoted. But every time they pivot, and whenever you see the word pivot, and I'm not talking about a pause, I'm talking about an actual pivot. Whenever you see that word, whenever it actually happens, a lot of your friends are going to be bullish, and I am going to pull everything out. It's over. It's over for the next year or 2-3 years, whatever. And so there will be, in my opinion, some very short-term euphoria, but the smart money is going to be like, I'm out, and I want to be smart, And so who knows? Maybe we'll see a huge spike up to whatever, some new price for Bitcoin, and then honestly, if they lowered rates after this meeting, I would call for 4-figure Bitcoin. I really would, but they're not going to lower rates, and both of these options in front of us, raising or pausing, is bullish for Bitcoin. Raising by 25 basis points, that seems like it would be a negative, and it is. I mean, it absolutely is. But remember, that means a lot more money is going to get injected into the economy. The liquidity is going to rise dramatically, and so I think that's not on a lot of people's radars. And what the smart money will do is be like, all right, they're going to inject a lot more money into this. I'm short term in. I'm in. Let's do this. But okay, so really, I don't know how high we can go. I mean, if we're going, it depends on how much liquidity is injected. I have been saying $42,000 would be the peak of this bear market rally, but really, man, we have to wait and see. I'm curious to see where we go with the Fed's balance sheet. because we could certainly go beyond $42,000 if that's the case. I'm not calling for $1 million Bitcoin in 30 days. I understand the logic. I understand the reasoning behind it. I don't think that, the guy who first initiated that idea, that it's going to go the way that he claims to believe it's going to go. I mean, we'll see. I'm skeptical that he actually believes that. I will need to draw new lines. $42,000, there would be heavy resistance there. I do believe if the Fed raises rates today, really, even if they pause, that we're going to see Bitcoin go over $30,000. There's going to be some resistance in the mid 29 section. That is the focal point of this range, the middle of the range, the point of control. There's a lot of volume within this range right at 29.5, but I think we will eventually break through that and get up to this $32,000 range. But after that, I mean, if we're adding more so to the Fed's balance sheet, we're going to see new highs on the Fed's balance sheet, go over $9 trillion. Oh my goodness. We're going to go higher than $32,000. So, that's no guarantee for altcoins. Bitcoin's dominance is climbing pretty aggressively right now. I think that there are potential plays when you see Bitcoin's dominance start to overheat. Like yesterday, XRP went insane, and that's typically what XRP does. It drags along forever, and then boom, 25% candle. But I think Bitcoin, we're going to see over 50% dominance, and maybe even get up to 60% in the short term, if we start seeing again this kind of reversal continue. So, man, I'm not excited right now. Am I excited to add a few dollars in my pockets over the next few weeks? Sure. But this is terrible. This is just really, really awful. And it's going to get ugly soon. I mean, literally to the point where, we've had chickens before in my house. I might build a chicken coop. Might get some rabbits, have them reproduce to the point where I'm having to kill them for meat. I'm dead serious. Kill them for meat so I can feed my family. Stay safe out there. I mean, you've been warned. There's no easy way out of this. It's going to get very ugly. It might get, there might be some excitement over the next few months, dollars-wise, for your assets, but at some point it's going to get really, really ugly. So be prepared. I'll see you in another video. Peace.